G'day folks, welcome back to another update for Bitcoin and Ripple. Now, charts are showing a retrace has occurred and probably still occurring after hitting and still going longer term, still in a bullish mode. So just be careful of going long too hastily. We might see further declines in the price. Before you go any further, make sure you hit that like and subscribe button. And also, before we get into the analysis, if you've got questions around these daily videos, and reference the +1 videos, which break down the daily videos into simpler language, and they're identified by the +1 symbol on the thumbnail. In terms of today, June 7, Bitcoin is trading around 107,000, reflecting a 1.1% increase from the previous close. Despite recent geopolitical tensions, Bitcoin has shown resilience with institutional adoption and favorable regulatory developments under the Trump administration bolstering its position. However, its role as a safe haven asset remains debated, as it sometimes mirrors risk asset behaviors during crises. Ripple's XRP is currently priced at about $2.24, about 2.8% from the previous close. The recent joint motion between Ripple and the SEC to reduce fines suggests a potential resolution to ongoing legal challenges, which could lift institutional sales restrictions and enhance XRP's utility in cross-border transactions. Analysts anticipate that these developments, along with growing institutional interest, could drive XRP's price higher, with some projections aiming for $5 by the end of 2025. So we always look at the long-term trends, and this is Bitcoin on the monthly, weekly and daily. So on the monthly, first off, you can see the price is very strongly bullish above the moving averages. And notice the CCI is also broken higher, but actually retracing back towards that moving average range, which means we may see a pullback in the near term on the monthly. Now, also on the monthly, I've identified these blue areas are basically what's called fair value gaps, and that's basically unfilled orders. Now you can see these ones have been filled with the wicks of those candles, and likewise up here in that little range. But down here, there's no retrace into that area yet. So I've marked that with a red rectangle. So very, very long term, and this is not going to happen overnight or next month. It could take years to play out actually. We may see the price retrace back to that level. Back here, there's other fair value gaps that haven't been identified. So again, just be mindful of those. And back here, you can see that was filled with that wick of that candle. And they were partially filled back here as well. So again, a very long-term play, but just be aware of that. We don't trade them. We just look at it as a potential as a area to retrace back to. On the weekly, we've had a bearish divergence here, lower highs on the CCI versus higher highs on the price, and that broke down into our minimum target range. And again, on the trend, we first look at the trend. The price is above the moving averages, and so is the CCI, although notice the CCI is just a fresh break to the downside on the weekly. So that's a weakening sign, which means we'll probably likely see further declines. Now, what I've identified here as well, now you notice back here, for example, we've got these fair value gaps, and they've all been filled by the wicks, all these candles in subsequent periods. And the more recent one here, I've identified with red, has not been crossed over yet by any candles. So we might see a retrace down to that area possibly. Again, this could take weeks, months, or even years to play out depending on how it goes. But first we look at the trend, and a trend is showing a weakening momentum. There was a slight penetration into this fair value gap, probably about 25% of it, and so I haven't marked that, but that could be if it drops down to this area, that'll be obviously penetrated as well. On the daily, you can see here we've got another first the trends. The trend on the price is just above the moving averages, so still somewhat bullish, but I'd call it a neutral positioning. It's consolidating in that range now, versus the CCI is broken below the moving average range, a very narrow moving average, but it's broken below, and that's a weakening signal. You could always just do a false break like it did back here, but at the moment, predominantly short trades should have been taken from this period back here when the CCI broke below, and I'll show you the back test in a moment. But again, notice these fair value gaps haven't been filled. So again, longer term, we might see the price retrace back to, at the very least, to that level on the daily. If we go to the intraday charts, again, taking predominantly short trades, what we first look at is, first of all, the trends. So the price is below the moving averages, and so is the CCI. So again, short trades predominantly, but notice up here we've got a fair value gap that hasn't been filled yet. So we might see a short spike higher before falling further. We had these other fair value gaps here. That was filled about 50% of that range there with that candle, with that wick. That one there was also filled, that fair value gap, with about 50% of it with that wick of that candle. If I zoom out, you can see all these fair value gaps have been filled with the subsequent periods and the hours after it. Again, no divergence to identify. So if we go to the back testing, we look at the short positions, and what I've got here is taking short positions from that period when the CCI broke below the moving average on around the 28th of May. That's identified here with these two back tests. The first one is the stop loss approach, and the second one is the average down approach. That belongs there. So basically you can see here you would have taken short positions going and following the daily trend, and you would have stopped out those positions or closed out your positions once that CCI broke into that moving average range, and that was about this area here on both the stop loss approach and the average down. Up until that point, the stop loss approach generated about $159, and the average down approach, although it took a bit of a loss there, it still generated about $4,600 because we multiplied our positions during that period. Also, notice here we had a bullish divergence versus lower lows on the price, and that's a potential area to close out your positions once you see a bullish divergence start to execute, like you would have done when it broke above the moving average range there. You would have closed out your positions and then re-entered it short positions once you see the price and the CCI break below again. So next we look at Ripple. Now there's no CCI for it on the monthly, but the price is well above the moving average range, but notice it's consolidating and somewhat dropping off. So still bullish on the monthly. On the weekly, however, we've broken below the moving average range on the price, and the CCI was already below that range previously, so that was declining. So that would have been predominantly short trading on the daily if you're trading on the daily. On the daily time frame, again, it's been consolidating in this range with the CCI predominantly still falling off. Now it's currently in that moving average range on the CCI, giving us a neutral signal, and the price is also retraced back into that moving average range. So avoid going long or short, but probably predominantly short positions on the daily. On the 1 hour time frame, you can see here we've had a bit of a spike up in the last few hours over the last couple of days, bullish momentum, but again you would have taken short positions primarily based on the trend of the daily. So what you look for here is any divergence, and there's no divergence currently showing up in the latest period. The last divergence we had was here before our last video. We had lower highs on the CCI versus higher highs on the price, and that dropped down quite strongly. In fact, it came close to 100% retrace of that level there. So always pay attention to divergence, no matter which way you're trading. And again, there's no divergence currently on the 1 hour time frame. So if you're new to trading, we're now including a video series, Pizza Investing Plus One, as part of the Pizza Investing channel. The Plus One videos are a dumbed down version of our strategies, and give you a better insight into our analysis and help you follow our daily videos. And if you enjoy the content, subscribe at least on the free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.